Hi everybody, Alex Deploy here from Expert4x, and in today's video I'm going to be covering the magic moving average. Now, clients that know Expert4x know all about the magic moving average. You will also find a free course in this video. The links will be in the description of the video as well as in the first commentary, but we're going to learn all about what makes this particular moving average a magic moving average and why that is in fact so important. And why this is so important is that we are bringing out the most magnificent robot in the next week or two. It is called the Expert4x Hedging EA. Nice and simple name, but it uses all the major principles that Expert4x has been using over the last 20 or more years. We're going to be looking at it. Incorporates principles of the moving average trading, grid trading. It uses top-ups, which result in a multiplier effect. It uses hedging, and it uses very clever lot sizing strategies. So this robot is going to be a super robot in that it incorporates most of the really good stuff in Forex trading. And in this video, I'm going to be focusing on the moving average principles, because that is going to determine the entries for this particular robot. Okay, so let's talk about moving averages. Now, when I started out and when I was in my first few months of trading, moving averages were seen to be one of the key components in trading. In fact, most people in those days used them as trading signals. And how it would work is, and I'm going to put a moving average on the screen. We'll put one on here and we'll say 21 was the most popular one in those days. That was actually a trading signal, and I'm going to just put a red color to it, and we'll put it on the screen. Now, the beauty of moving averages is that they divide the market into buy and sell zones. So when the price crosses the moving average and stays there, that is a buy zone and that is a sell zone, and so on, and that's how it works. So 21 was, as I say, was what we were basically taught in courses, that is an effective moving average. But you can see what happens here. There's a lot of lost trend here that it catches that beautiful trend, but look at that trend, cancels out all your gains and that kind of thing. So it enters very late, and it also can have whipsaws. This one's not too bad. It hasn't had too many whipsaws, but over there it can cause whipsaws where it goes over the moving average, comes back, closes on the other side, then goes over, and so on. That's called a whipsaw. So we looked at this as students learning something new, and we thought, this looks good, but it doesn't look that great. So then we said, okay, what if we increase the speed of the moving average? So what we would do is we would introduce a new moving average that has a faster speed. In other words, it uses fewer periods. So here we go, and I'm just going to color this one green so that we can see the difference. So we started experimenting with dark green's good, faster moving average. In fact, we went to 4 was our moving average that we started with. We said 21's too slow. Let's see 4. Now 4 should be faster, and 4 is a lot more faster. Just look, it catches the trend right in the beginning. You don't lose that. It catches the trend there. Look how quickly it caught the trend there. And it's so much faster than the 21 moving average and catches these trends so well. But it has the disadvantage that it has a lot of whipsaws. So if you go down this trend, you'll see it goes over the moving average, comes back, goes over the moving average, comes back. So it does have whipsaws that really discourage such fast moving averages because of those particular whipsaws, but they are so much better because they get you into the trend so much faster. So what we did, we said, well, what can we do to improve the efficiency of this fast moving average? So what we did, and this is where the magic comes in, and in fact, we did call it the magic moving average. I sold a lot of courses using the magic moving average, and I also made a lot of money using this concept. So what we did is we introduced another moving average which takes away all those disadvantages. So we went like that. So this one was on 4. So we said, what is the shift function? Why don't we shift it by 6, for instance? And I'm going to just give it a different color, and let's see what that actually does. So we said okay, and then suddenly see how it shifted. It shifted, in fact, 6 candles. It shifted there. In fact, what we used is 4x4, and I still use those 4x4. So what suddenly happens is that it gets rid of all those whipsaws. We take that trend going down there. Look how the price jumped over and over the trend there. It got rid of that because firstly it got us in nice and quickly, but it isolated the trend so much better. And over there too, again, you look at the blue, the trend, there's no risk of a whipsaw. So you're giving away a little bit of sensitivity, but you're getting the safety of no whipsaws. Just look over there. In fact, what I'm going to do is I'm now going to delete these ones that I used earlier, and we can now look at the magic moving average on its own. So what the magic moving average does, it really creates a good buy and sell zone very quickly. So there's the buy zone, there's the sell zone. Sometimes it gets you out at the right time. There's the buy zone. There's a bit of a whipsaw there. There's the buy zone. There's the sell zone. So it's very clear that where the major zones are. There's a sell zone and there's the buy zone. So this became our magic moving average, and there were many other techniques that we used to add filters to this particular technique. But what we're saying here is that this magic moving average is the basis for not only good entries but good exits. So you would enter your sell there, stay in it, and then when it crosses over into the buy zone, you would exit. So they make fantastic entries and they make fantastic exits. What's more, and most importantly, because in trading you want to stay in the trade for as long as possible when it's trending. It keeps you in the trend. So it's telling you, oh, I'm selling, I'm selling, I'm selling, I'm selling, I'm selling. And only there does it tell you, no, I'm not selling anymore. So it keeps you in the trend, the big trend. It keeps you in the big trend for so much longer than any other technique. You can never get the turnaround perfect, but it keeps you in the trend. Look at this current trend that's happening there. We would have caught it down there and stayed in it. So the magic moving average is a fantastic tool to use for entries and exits and for staying in the trend, and that is why we're using it for our new robot. So I made a video a while ago when I still had lots of hair, and here is the video. There's the link. I'm not going to repeat the contents of the video. It's almost a 24-minute video. It explains the whole concepts of the magic moving average and the advantage and disadvantage and how you trade it and how you avoid whipsaws and that type of thing. Please go and watch this video. It also has 2 free courses about moving averages that are absolutely amazing. It will blow your mind because certainly it has helped us make a lot of money out of Forex trading, simple concepts like moving averages. So I thoroughly recommend you go and watch this video and download those free courses. We also created a trading robot called the Moving Average Multiplier Robot. There it is on your screen. As you can see, there are videos explaining how it works. What that does, it helps you multiply the trend. So as a trend happens, it helps you multiply the money you make in that particular trend, and so on. So if it's going up, you just multiply your gains, and you multiply your gains when it's going down. So we have had a history of 20 years trading these magic moving averages. And as you know, or as you might know, we produce monthly, or every second month, we produce optimized settings for most of our robots. And here is a list of the robots that are being fall under this particular service, and there you can see the moving multiplier is alive and well and being traded by our existing clients. How you get there is you go to our expert4x.com website, and there's a block there, up-to-date report on results and settings, so you can actually see the results and you can download the settings from this particular page. So the moving average trading is alive and well and is happening, and it is going to be happening in a big way when we get to our new robot, which will be launched in the next two weeks. Now, to download the course, there it is, the magical moving average forex trading technique. There you can download it. You go to our free forum. There it is. You have to be a member of this forum to download, but it is totally free. Whatever's on this forum is free and educational. There's courses, there's techniques, and here is one of the courses that you can go and download. Just use that, and a clickable link to this course will be in the description of the video. And I hope you've enjoyed this video. I hope you've learned a little bit about how you can take a really ordinary indicator and turn it into a money-making machine by manipulating it and using the more sensitive settings, but offsetting that moving average to create those really strong buy and sell zones that provide great entries, great exits, and eliminate a lot of the whipsaws that can happen. And as I say, the purpose of this video was to just tell you about the moving average, because we are going to be using it in the new robot. We'll be covering a few of the other techniques in future videos. So from me, Alex Deploy, cheerio.